S&P reverses course midday. We'll explain why. Nasdaq reverses, forming a bearish pattern. We'll explain. Despite the macro news that moved the market, semiconductors actually made a higher high on the day. We'll explain semiconductor equipment manufacturers and how they're driving. Intel up 10% after hours. Meta gapped up on great earnings but sold off the entire day. Very different than other names that came out and crushed earnings. Other semiconductor manufacturers come out and beat after hours. We'll explain what this means going forward and how to benefit from it. Solid economic data today with GDP and PCE on deck for tomorrow. What caused the rally in the Japanese yen versus the dollar and why you should care about it. We have a lot to go over. Let's get to it. Hey everybody, welcome back. We'll start with the basics. We have a reversal here, and we're obviously going to comment on that reversal, but I think there's some things here that we should just discuss first. We can all see the higher high and then the clear reversal here. Now, make sure you watch Saturday's video because I'm going to have more time to get into detail about the blackout period and the buybacks, and then we can all put on our tinfoil hats as to why this happened today. But more importantly, it happens. The question is, what do we do about it? Well, we understand that we're trying to get through this key level. And did we really think it was going to be that easy, that we were going to get through an 18-month level just on the first try? Usually it does not happen that way. We're all pretty much aware of that. It usually takes a little bit more time. Just going to want to watch that. And you can see even here, remember when we got through these or this, it didn't happen way. It took time. Even here, getting through, reversal, the end of the world was right here, and then we flip it, and now we're back up here talking about, well, this clearly must be the high. Only time's going to tell. We're going to walk through why this happened and then what we can do about it going forward and how we can benefit from it. Now, let's just start with the basics that we have to be aware of tomorrow. This is investing.com. I tend to use free sites on this. You could go and find these sites yourself. You can see it right here. And this is free. Just go here, economic calendar. You can get all this data yourself for free. You do not need to pay for a service. The stars are nice because they tell you what you're going to focus on. 3 stars mean you want to pay attention to that more than anything. Yes and no, but for our purposes, yes. Core PCE, Powell made very, very clear that it is very important what's going on with core PCE. This will be watched very closely tomorrow. 0.2, 4.2. This tends to be a little smoother than CPI. Anything that comes out of the ordinary of this is going to be an issue. That's what they're going to be focused on. Will they look at PCE price index of 3.1 and the PCE price index of negative 0.1? Yes, they will look at that tomorrow at 8:30. They're really going to focus on what happened in Japan, and that opening tomorrow is going to be a big deal. We're going to have to watch that tomorrow. We're going to talk about that in a moment here. But remember these two numbers and wait and see how this comes out at 8:30. I think that this, as long as this is smooth, will be okay. You can see the drop from 4.6 to 4.2. 0.3 to 0.2. And just FYI, for those that aren't aware, when you see core, take out food and energy. They're the two things that come out. Food and energy focuses more on some other things. You might focus on housing, medical supplies, things like that might be in here that might have a little more weighting than they would in the real one, because this is core and this takes in everything. This does not. Now here, today's earnings, and again, this is investing.com. Today's earnings are something we have to talk about, but more importantly, what drove us at 8:30 today? And we're going to go look at this line by line so you can see what actually drove us. Continuing claims, they came in better than expected. That's a good thing. I like when people have a job, despite the fact that the Fed seems to be on the other side of that. But here's where I'm at. Look at this core durable goods. Okay, core durable goods are going up. People are buying things, guys. Durable goods orders month over month, 4.7%. People are buying things. We could talk about this, excluding defense. I don't really care. Where the big rubber meets the road is this, 2.4%. So the sweet spot, the real sweet spot of GDP is that 2%, low 2s. 1.8% people don't like. They really want to see anything over 2.5%. 2.5% is considered the baseline for earnings growth, meaning that's where you're about going to keep in line with your earnings projections. Anything over that, when you get 1% onto that 2.5%, so like 3.5%, you add about 7% of earnings growth to the S&P. I can get more into that if people are interested in that. You can comment below and I could do a whole econ video on it, or maybe we can do a live call on it or something along those lines. I'm not going to get into it all tonight. GDP sales are up. This is what drove us. Now, if we look around that 825, 830 number, we get a level. It's rare. Always mark levels where you have an event. the high and the low, and then you just watch how you act there. It'll tell you where the players are and what the players are doing. It's very simple to do. It's very easy to do. You just mark it. So you know that that's the low there. Get my little arrow. And then you can see how you reject here and then you reject there again. Okay, is this telling? It means you might just bonk around in here. This was pretty telling though when you have this rally up. You have this double bottom that forms. It's not perfect, but it's there. And then you start cascading down, and then obviously you're here. Now we have to talk about what got us here. Why did we fall the way that we did? This is really important for us to understand. Now, BOJ to discuss yield curve control tweak to allow rates over 0.5%. Who benefits from higher rates? Banks benefit from higher rates. Who else benefits? Well, certain countries are going to benefit on their currency. Why would that affect the dollar? We're going to get into that in a moment. But if you go through this, the Bank of Japan will discuss tweaking its yield curve control policy at a board meeting Friday. Guess when Friday is? Tomorrow, at the time of recording this. To net long-term interest rates to rise beyond its cap of 0.5. Okay, to rise beyond its cap of 0.5 by a certain degree. Now, this is important for a couple reasons. They have been extremely tight on their policy. And we have benefited greatly from that consistent stability of them being very tight. Powell goes around and moves our levels by 75 basis points. They're talking about going from roughly this 25 basis points to a 50 basis point threshold. And they're talking about it in regards to this capacity to allow the rates over 0.5%. Very different structure in a hands-off approach. This is something that we need to understand. We have had this stability, and since we've had this stability, we've benefited from it. How? How have we benefited from it? Okay. So how have we benefited from this? Very simply, I'm going to do this from 34,000 feet up. In other words, if you want more details on this, comment below and I can get into it more on Saturday. And I know that this is somewhat cloudy, but this is the best I can do to get this into a daily video. Here's the Japanese yen. It's 13.6%. Then you have the pound and you have the euro. What things are the most stable to the US dollar? The most stable is the euro and the pound. They're almost tied together in the way that they move, except when the pound went a little crazy this year and they had some issues over there and then it adjusted itself and so did the dollar. But we're really pegged here. And so then you have here and you have the Japanese yen. So if there's any massive fluctuation in the dollar index, which is DXY, it's going to come from the yen. It's not going to come from the Canadian dollar. It's not going to come from the kroner. It's not going to come from the franc. It might come from the pound as it did this year. It certainly can come from the euro, but that's pretty rare. They're pretty locked in with one another. So the yen is where the DXY fluctuation can vary the most. It doesn't mean it's going to move it the most, but it means that this is where the biggest variance of this entire diagram or pie chart rather can come from. Again, if you want greater detail, just comment below and I'll go through it on Saturday, but I want to get this out so that you guys have something to work on tomorrow. So the graph's a little rough, but it is what it is. So now I get it. You're like, okay, well, that's great, but why would we do this when this was announced? Why would we cascade like that? Well, let's look what else happened around that period in time. Here is the Japanese yen versus the US dollar. Here is the Japanese yen versus the US dollar. When they made that announcement, what happened? We skyrocketed. Now, I know it doesn't look like a skyrocket, but you have to realize that this is currency. So if you had this in the bank and all of a sudden you have 1.66% more money, it's a skyrocket, if you think about it in that context. So when this happened, you have a variance. How did the dollar respond to that variance? Well, it's only going to move a little bit because it's 14%. What happened? Well, here we are off the open. But what happened to the dollar once that was announced? Well, you could no longer get over those highs. Why couldn't you get over those highs? So what is this going to do? Well, this might pin the volatility to the upside of the dollar. In my opinion, I think that that's what it's going to do. I think it's going to pin the upside of the dollar. Now, is that good or bad? It's neither, because it actually will affect, and I'm not going to get into all this tonight, it can actually affect the GDP numbers. Because when we start importing and exporting goods from Japan, and Japan starts trading, and their dollar, meaning their yen, is worth more, well, that affects GDP. And that's a completely different conversation. But it's not just how it affects the dollar that's going to be the problem here, because it's only 14%, but it's still the greatest variance. So this is why we sold off today. I'm going to show this in line chart because it's very, very thin, but this is MFG. Who benefits from higher rates? Banks benefit from higher rates. This is a Japanese bank. It is actually one of the largest Japanese banks over there. Look at this volume at 1 o'clock when that kicked in. That's the same exact time that the yen moved. What happened here? You had to move and you wound up getting up to here. This is something that you may want to consider if you're trying to figure out how can you benefit from what we're going over, besides how it affects the market. I'm going to leave this like this because it's pretty chopped up. We might be able to do it in candles here now. Yeah, I guess we can. So you can kind of see these levels in here. And if you start breaking out of these levels, it's certainly something that you're going to want to pay attention to. That's for sure. It's certainly something I'm going to be paying attention to tomorrow. And I'm really curious what they come out and say, especially the investment banks here, and how they react to this. But this is pretty big news. And it's much bigger than people are making it out to be, because you can see that banks have been stagnant. Well, why have they been stagnant? Well, if you can only lend money and you only have so much money because you have no growth in your country, you have no deposits increasing, you have no growth, how are you going to make money? Well, it's on the lending rate. Well, if they keep the lending rate at 25 basis points, you're not going to make a whole heck of a lot of money. Now, if that changes and all of a sudden they double the mark, how much are you making now? Okay, this is a 10-year base, guys. Right? You're looking at a 10-year base. I mean, we can have the argument about here in the pandemic, it is what it is, but this is a 10-year base. And you're coming out of a 10-year base. And monetary policy is changing. You know how they have that saying, don't fight the Fed? It doesn't matter which country it is. So I would put this on your radar. It's definitely something that I would look at. It was really important for me to get that out there because that's what's driving the market. And it's very important to understand that. XPEV is something I actually am throwing in my negative tail on, and I just want to go through this. I actually have a position in it right now. I'm basically down a little bit in it. I read this whole piece and I liked what I read in regards to the VW merger and the 2 new cars they're creating. I don't think this is going away. I think that they're going to have funding through VW. I think VW wants access to the Chinese markets, and I think they're going to get this through there. Their pricing on this is $15. They're not capped. In other words, if this drops below $15, they can just buy more if they want to. They're not capped, and they're getting approval to do this. So this is already has approval, or they wouldn't even be doing it, especially in China. Something to think about and something for us to watch and see how it acts. But I think this is big stuff. I do like this, and I do like seeing this happen with some of the other EVs. I'd like to see more competition, but there's some names here we're going to go through as we go through some of the earnings that are out here. There's some names that I think we should just focus on for a moment. So UPST was one that we've done exceptionally well with. You're starting to see that reversal. This is your first down reversal bar. Why are we dropping off? Because it could affect GDP. It could affect our ability to control inflation by what Japan does. If everybody raises rates, inflation doesn't really go away, does it? So we have to look at what Japan's going to do, and it could affect us in a myriad of ways. I only went over a couple of them right now. So you're going to see U.S. financial companies like this. They're going to come in a little bit. Now, this was one that we walked through today in great detail in the pre-market. And if you don't watch the pre-markets or you can't make it live, we start at 8:30. Try to do 8:15 sometimes, but it's not really happening lately. And so you can see how we're riding that 22 right there. We went over this. When you have a 12 and a 22 and you're fighting like this, all you want to do is just see how you act when you get up here. And this provided a great short opportunity with stock and puts today. And I don't see any reason when I start rolling off the 22 and I use a 12, a 22, and a 55, well, that's not going to work. Let's go back to these. That is what you want to watch. 55. That's my target. I think that you can get down there. Now, there's some other stuff here, too, that I would watch. And I'd watch this very, very closely. And you can see that in there and see how you're acting. I would not sleep on this. This is not one that I would sleep on. I think that you could still come in pretty hard. And now you're starting to roll under that 50 right there. And this is not where you want to be. You do not want this to be rolling under 50. Whether or not you use RSI does not mean that it works or it doesn't work. It's like saying gravity. To me, that's how it is. It just means that you don't know how to read it. I mean, I hate to be that critical about it, but when you start flipping these 50s one way or another and you can't see what happens to the chart in here, I mean, it's not debatable. It's like debating gravity. When this starts flipping, gravity doesn't care if you fall off a cliff. You're still going to fall. So when you see these little moves over that 50 or under that 50, breaking, when you're up here and you break under a 50, you're going to underperform. When you're down here and you break over a 50, you're going to outperform. It's that simple. Don't read more into what I'm saying than that, but it does work. And this is very clear that we're setting up to break, and I would watch that. We do have a strong spot in the market, and we're going to discuss that strong spot in a moment here. I do want to talk about RIVN because it's one that we've been talking about. We had a $28 target price on it. It hit our target price of 28 today, and we trimmed into it. Do I think that it is busted? No, I don't think it's busted. I don't think it's busted at all. I think we rejected because everything rejected. And we're going to talk about why I think this rejection happened more on Saturday, but I want to get this video out and I still have to edit it. So you can see the 28 right here, you rejected. These to me are usually not one-day reversals. These are usually days where we come in, and then when we come in, we have another day because everybody hopes and they hang on. And then we know what happens with hope. And we'll slice this, everyone will say, that's it, it's over, and then it'll consolidate for a week and go higher. I don't think this is over, and I think it's something you should be paying attention to going into earnings. But it's really important to understand where your major support and resistance levels are. We had a couple people in the room absolutely crush it with this trade today, and I did not do this trade. But I get asked a lot about trades that I do and trades that are done in the room. And I just want to point this out because this was glaring, and it allowed them to make a more informed decision. When you understand where your key levels are, when you get to that key level or area of interest, see where you rejected here, see the battle here, you should be able to see that all in here, and then how you fought and flipped there, how you battled there. Once you know where that area is, it makes all the difference in the world in your trading. I mean, to the penny, you were there. Well, you're off by 9 cents, but you get what I'm saying. So when you start approaching an area, you go, I really want to see how it acts there. Well, that's how it acted. It completely rejected that area. That allowed people to make a better decision. Again, this is not a name that I played. Now, NVIDIA, we talked about this, and we talked about the 460 level, and you're going to see these names up, and we're going to explain why these names are up in a moment here. But you can see that 460 level, and I want people to know this for tomorrow because I think it's really very important. First and foremost, let's go through this on the pullback chart. Clean up and do this one. And I want to drop this in. I'm going to drop in a VWAP. I'm going to show you a trade that I did that did not work, because I get asked to show trades that do not work every once in a while, and I think that's really important for people to understand that I have losses just like everybody else, guys. So you see this is a 9 EMA. This is your V. You're trying to get over. Okay, this gave us perfect entries on the long side today. If you wanted to play it, you can see the undercut right here, and then the bullish harami. You should watch those candlestick videos. I'll try to link one at the end today. I'll link it at the end, I'll remember. But what you saw here was you saw us riding V. Oh, I love that. Like, that tells me a lot. I've got support, and it's not one bar. Even though the market's dropping, you start realizing that this is one of the strongest sectors. And then you're watching it. 1, 2, 3, 4, 5, 6, 7. I've got 6 bars in here that are above and giving me wick city. Wicks are what? Price rejection. I flip the 9. People will say, well, why'd you buy with the 9 pointing down? If I wait for the 9 to point up, the stock's going to be up here, just like here. You couldn't wait. You don't wait. Well, you can do anything you want. I don't wait. So I watch it, it bounces, I buy it, it doesn't work. I say VWAP's my stop, cost me $1.50, I get stopped out here. Here's the important reason and why I'm bringing this trade up, besides the fact that people wanted me to mention losses, and I have zero problem doing that. I'll do a whole video on them. See that? If you remember one thing from this video, honor your stops, period. It's not a debate. It's not, oh, they make the H100 chip. Oh, we're going to bounce later in the day because institutions are going to want exposure to NVIDIA because KLA is coming out with earnings. It's nonsense. If you can't trust yourself, don't trade. If you can't trust yourself to get out here, don't trade. Because what's going to happen is now you're going to not do that. It's going to drop $9. Okay, what people did in the room and what they learned in the room or picked up in other places, but frankly, I think it's from the room, is they reversed my position right here. And I reversed a bunch of these tech names today when they started cracking on that news, and they went short. And they did exceptionally well here. And I'm going to walk you through another one that worked out exceptionally well. But why did that work? Because this let you know your stop is placed at a level where the trade is busted. Now, could you have come back up, flipped this doji? Yeah, of course. Of course you could have, but you didn't. But you could have. And you're just seeing weakness across the board, and I think it's worth pointing out with what we're seeing with Microsoft. But I really want to get into Meta. And this was our level, and I'll show you exactly why this was the level and what's pertinent about it here. In here is your gap fill. That close, you go to the close. That was your close on this day. It was 323. And you got right today, and what happened on the 4 hour? You got right there and you rejected. Now, you see that level right there? Let's open that level up and get into an hour. All right, let's open that up even more and get into a 15-minute. Okay, let's open that up even more and get into a 5. See where I'm going with this? By expanding your time frames as time goes along, it provided a huge opportunity. All we did today was this. That's all I did was watch the 9 and VWAP. And I watched this consolidate, consolidate, consolidate. And I waited. And we waited. And we knew we had a bunch of people that owned calls coming in. I did not own calls. And they sold right into this, because they knew that this was the level. See, when you understand where your key levels are, your life gets a lot easier. It's just learning how to identify them, and then you can just see how you consolidate it. And then we just had Wick City. And when we know wicks are price rejections, when you're rejecting on the top and you're rejecting on the bottom and the VWAP's there, well, they're just, clean up my language, they're just making the Joker out of you. And you can see that right here. The battle, the battle, the battle. Well, eventually it's got to break. It's like any dam. The levee's got to break. And what happens? And that was it. So that let us know to put a short on. That short did exceptionally well today. You got a couple other spots where you rejection of VW, other opportunities. I wrote this down. I did fairly well with puts. I still have some puts in it. I bought more puts. I still have those puts, and they were kickers at the end of the day, but they did very well. More towards probably right here when that rejection. That's where I did the second batch of puts and stock to short. When I turned right here, I actually covered the short. And then when I came up and failed, I reignited the entire common short in there. So that's the whole thing, guys. You can close your positions out and go from there. Anyway, what do you need to know about this for tomorrow? Why am I going over it? You're going to have to give me a good reason why you don't gap fill. And I think you should watch this tomorrow and the possibility of gap fill. I have a ton of puts on this. I'm just going to be blunt. I think it has the potential to gap fill. I don't know what happens with PCE. I'm up enough in it in the day that I can't get destroyed on it. So I'm fine with it. Lam Research, this is what we have to talk about with semiconductors. You need to understand what's going on with Lam Research here. They absolutely crushed. They absolutely knocked it out of the park. Let's get to this chart right here. Look at this on a 5-minute. Look at those numbers. Okay, you don't have numbers like this if you're going into a recession, guys. We're going to go through this on Saturday in great detail. Look at that volume. Look at the volume at the end of the day. Did they want to own this? Did institutions want to own this? Or did they want to get out? Did you come anywhere near the low of the day? Right, this is always like your smell test. You go there, you click on your fib levels, and you just get a look. Where'd you make it to? Okay, you couldn't even make it all the way down. You got to about 50% of it. You couldn't even make it all the way down. This is telling you everything you need to know. Drill into this on a daily and look at that chart. Look at this on a weekly, and you're about ready to hit all-time highs. Okay, this is the beginning of the way the cycles work. The cycles work with the semiconductor equipment manufacturers running first. Then when they retool the foundries start doing better. Then when the foundries start doing better, NVIDIA starts putting out more chips. That's the way that it works. KLAC, I had a great trade in this today, made 10, 11 bucks. Some of us, including myself, held it into earnings, and then I just married a put behind it, and essentially it was a free trade. I am going to do a video on that if I get comments on it. I'm definitely going to do one in-house for the community. There were a lot of questions about it today, but it's a great way to hold trades. If you can get up and in before earnings and marry a put to it, you really can't lose money in the trade as long as you do it the correct way. You're just marrying the put to it with the, as long as it takes into account the profitability, you're fine. But this is trading up. You had excellent earnings, and I would expect the stocks to do okay on this. Despite that, Intel out here telling people that they have $1 billion in chip sales in the books for chips that accelerate AI chips. Well, that opens a whole other can of worms, and I need to listen to this conference call a couple times, because to me, well, why do I need accelerators? Well, I need accelerators because you can't buy all the NVIDIA chips, right? Because we already know that there are capacity constraints. Okay, so you already know we have capacity constraints, but are they accelerators to AMD's AI chips? Like, I need to connect the dots. But that might be something here, and this is something I'm going to have to really drill into. I don't know what these earnings are coming out. I certainly am not going to own AMD going into that, but this is something that they mentioned on their call today, and I'd be remiss in not paying attention to it. That's it.